let me say leaked, but it's fine. Still the benefit of everyone anyway. So like I was saying, in case you're here and you are a student and you are not in any Telegram group, and you know that you are a participant of the TLS or any other mentorship under me I've ever taught, spearheaded by me, you could send me a direct message to be added to your group. And lastly, before we begin, the question and answer as usual is still going to continue, and the class leaders of the other classes will, as usual, open the question and answer group from 12 p.m. every day. Everybody can drop their questions. Alright, so we're going to begin. I'll share my screen and I will just use a minute to monitor you guys from the from your individual groups to know if you can see my screen. So I will check with my phone, and I just want to see a response that okay, we can see your screen or not. Okay, so please, can you see my screen? Can you see my... Okay, it says screen is clear. Alright, fine. Since the screen is clear, we are going to begin right away. I'm going to explain how I got this to set up, but before then, let's just refresh our brain a bit. Now, market structure is market structure anywhere you go. It's the same thing everywhere, not just here. And it comprises of higher highs and higher lows, and lower highs and lower lows. Now, these things were not formulated by me, despite most people might say the Sabii Gal strategy or something. Everything I taught you, I was not the founder of it. Alright, it's just that most of them I explained them in my own understanding, because I was as well taught by somebody else. So kindly bear with me if you find it difficult to understand better. I will still try my best to see that I explain to the understanding of everyone. Alright, let's proceed. So we have the uptrend. In market structure, we have the uptrend, we have the downtrend, and we have the ranging or consolidating market. Okay, let's just call it ranging, so it doesn't confuse you anyway. Because if I write so now, it's actually consolidating rather. I don't want to confuse you, but you can call it ranging, you can call it the consolidating market. Alright, depends on you, but ranging is more easier to pronounce, so that's why I want to remove the consolidating, so because ranging is more known as well. So first of all, we'll be starting with the uptrend. Yes, I'm recording. We'll be starting with the uptrend. Now, what is an uptrend? Now, an uptrend is when the market is generally moving upwards. Alright. The simplest way you can understand it is just by saying that price keeps making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. That's the simplest way. It's not confusing. Alright. Now, let me give an example. I'm going to use a staircase. Let's say we have a building and we have a staircase. Price goes, for example, the first staircase, if they are measuring it, is like 100, and the next time it goes to 120, or okay, let's use 130. It goes to 130, and when it goes to 130, when it is coming back, it doesn't go back to 100. Instead, it goes back to what? 120 or 115. That is it, and it keeps going like that without breaking the last figure. If this is 100, then this is 110. Let's put 100, 110. It comes back to this point, and in between 110 and 100, it comes down to 108. It doesn't come back to 100. Alright. Now, price doesn't break the last low it creates, breaking the last high. Now, the highs could be seen as weak points. It's just like when people are fighting and they say anybody that we push upwards. Okay, let's use when we were in school, they would say people should hold a rope, and some people from the left side and others from the right side. Then they would say people should drag it. Now they want to see who is weak and who is strong. Now, if these people are the people dragging from this end and these people are dragging from this end, the moment this price breaks these people here, these people, they are being seen as weak, and this low that broke this is being seen as strong. So in an uptrend, it consists of strong lows and the highs that get taken out is weak high. Strong low because it broke this high, weak high because it allowed this low to break it. Simple term, uptrend, creating higher highs, higher low. This is called higher low because it is actually a low, but because it's an uptrend, it is still a high. Let me put it like that, because it's an uptrend, so it's higher low, higher highs. Alright, which makes an uptrend. So in trading terms, when they say we are in an uptrend, it means that buyers are in control of the market as of that time. Alright, buyers are in control of the market. The call is recorded. Yes, the call is recorded. The call is recorded for those asking on Telegram. So like I said, it is said that buyers are in control, and the best market one could trade is a trending market. Either you're trading the uptrend or the downtrend. Now let's go to the downtrend, since we are done with the uptrend. Now, what is the downtrend? The downtrend is the opposite of an uptrend. It consists of lower highs and lower lows. It consists of lower highs and lower lows. Lower high, lower low. And the previous example here with the uptrend, we could see that their own lows are strong, but in this scenario the lows are weak and the highs are strong. Now, why are the highs strong? It is because the same example I gave, they are dragging a rope and these people are being taken out, so the lows are weak. All right, the lows are weak while the highs are strong. Now, when a downtrend is ongoing, it is being seen that the sellers are in control, and in most cases the main reason why people lose a lot of money is confusing market structure and entry. Market structure is the foundation of any strategy anyone is using. If you get your market structure, any entry can work out for you. If you have an entry problem, it is basically a structural problem. Alright, but one way or the other, people have found a way to buy inside a downtrend while they wait for a sale. We'll get to that anyway. Let's continue. So in a downtrend, price drops aggressively, pulls back small like this, like a reversal, and then a continuation. Okay, it gives what? A clear lower high and a lower low. As simple as that. Now, let me touch order flow while we are talking about this. If you observe in your chart, there are some times where price take out the first break of structure and price takes out the first break of structure, and instead of it to start selling, it starts buying. Now that buy you see is a reversal. It is not an uptrend yet. It is a reversal, most likely for a continuation. Now, why did I say that? Because until the second break of structure has been taken out, price is still on that particular trend. You can call it whatever name you want to call it, the second break of structure. Okay, it is just like an interruption in this trend. Remember I said when we are selling, we have to keep selling, creating the strong highs and the weak lows. So if we want to change trend, then price has to take out two strong points to show that it actually wants to change trend, which means that if it takes out one, there is every tendency that buyers could be taken out while a continuation continues. Now remember I said something. Now we have reversals and continuation. When I was explaining when we started with the introduction, I said something. I said that the strategy has not changed, right? It was just improved and filtered. Alright, refining your strategy is not bad. Okay, making it more simpler to understand, so that when you come into the chart you don't have to spend so much time. You already know what you are going to look out for. All right, so if we have a reversal here and then a continuation, that should tell you that there are people that actually will trade a reversal here, and while waiting, a reversal, yes, while waiting for the continuation. The reversal could be a buy, and then the continuation could be a sell. A sell because the trend is bearish. All right, like let's just say a pullback before a continuation. So until the second break of structure has been taken out, like I said, you can call it the name that suits it, but in simple explanation, it is like an interruption that takes out the second, that disrupts the present trend. All right, the present trend in the market. If everybody is selling and suddenly two strong highs get taken out, then that is an interruption, and an interruption could be seen as a disruption in English language. All right, so when price takes out this guy, if you decide to buy, you can get taken out. Why? Because overall, until this second break of structure has been taken out, highlight it with the body of the candle, then if it gets taken out with the body of the candle, then we could say that it has changed trend internally. We'll get to that. Would say that it has changed trend internally, but we'll still get to external and internal structure. So this is the downtrend and this is the uptrend. As simple as that. I don't need to say too much so you don't get confused. So talk about the third one, which is the ranging market. What is the ranging market? Now, as the name implies, when you hear range, it's already self-explanatory. The last time I explained the ranging market, I think I used a house as an instance, and I used a ball. I said if you get a ball I'm talking about is the normal, could be a football or a table tennis ball, anything. If you get a ball and you throw the ball on the ground, you would observe that if you throw the ball very hard and it hits the ceiling, you will observe that it will bounce back from that ceiling back to the ground, and most likely go back to the ceiling and hit the floor. Now it will keep ranging from the ground to the ceiling. As simple as that is the ranging market. It is neither going above it nor breaking below it. That is a ranging market. That brings us to what we call the support and resistance. If it comes here, this becomes a resistance. That feeling that it is bouncing down from is a resistance, and the floor that it will bounce up from again is a support system. So when price goes between a particular region, not breaking it, neither not breaking above it, neither below it. It is being seen as a ranging or consolidating market. It may likely not really be as I drew it. It could still be like this, but it is not going to break above or below. It is not creating a higher high, neither is it creating a lower low. It's just like price goes up to 120, drops down to 100, goes back to 115, goes back to 100, goes back to 120, goes back to 100. It doesn't break 120, it doesn't break 100. It keeps repeating. That is called range. Neither the buyers or the sellers are in control. It is an indecisive market condition. And in this range, the buyers are at the support, which is this, while the sellers are at the resistance, which is the top. I used the ceiling and then I used the floor. Now, how to know that you are in a ranging market? Price is choppy and messy. People that want to buy may likely get taken out. People that want to sell will also get taken out. No strong momentum, just equal highs and lows forming. Alright, as simple as that. Now we have done both the uptrend, the downtrend, and the ranging market. This one doesn't have higher highs or higher lows, neither does it have lower highs and lower lows. As you can see, it is not breaking above or below. Okay, so let's get an example in the chart before we proceed. Let me I don't know if I should clear this out. I wanted to explain this entry, but then let me just clear it out so that we could draw the structure together. So let's just begin. Okay, now before I continue, we have things to look out for to validate a break of structure. Just as I said that we have structure like this, right? We have what we look out for to validate it. Okay, we have what we look out for. Now, first of all, we need to have a structural liquidity. I don't want to make it too complex, so I may likely not explain the structural liquidity today. Maybe when we call for the next section again, I'll do that, because it's a bit confusing to many others. So you can see the price action. Let me use something a bit recent. This is January. Okay. This is a valid break of structure over here. This is a valid break of structure as well. This is that first break of structure I talked about, if you remember. And this is the second one I also talked about. And then I told you that let me draw this. this broker is 8 cap. Now we're going to be realistic to ourselves. You know very well that if you want to take a buy from, though we don't trade directly from a point of interest, we approach the market with continuation model. Now the reason is because we allow price to take out a certain level before we enter, creating a storyline. Alright, for example, if we have something like this, we allow price to, if this is the point of interest, for example, we allow price to get into the point of interest, even if it takes it out, and then let's say it does something like this before it takes it out. Now we approach it in the sense that we allow it to create a storyline. You can see that the early buyers at this level has been taken out, and we can enter from here. We'll get to that. We're just marking our structure for now. So the first break of structure, some people trade directly from the inducement. The inducement is the first break of structure, first most recent, rather, first valid most recent. So in this uptrend, this is the first valid most recent, this one here. In this uptrend, you can see that the last high that was created was this, and they could not break this high. They could not break this high. Instead, what happened? Their low was taken out, which is the inducement, the first most recent valid, emphasis on valid. If this thing is not valid, then even if price takes it out, it might still be selling till it gets to the valid, or it might still be buying till it gets to the valid, as simple as that. So this is the most recent valid first break of structure in this uptrend that was taken out, and this is the most valid second, which I told you that is just like an interruption. It has to break with the body of the candle to invalidate that second break of structure. Now when price closes with the body of the candle, it is being said that this uptrend has changed from uptrend to downtrend. Now remember, I said something. I said just because price takes out the first guy doesn't mean that you should just start selling. There are ways to approach this. So after the second break of structure gets taken out, it is being seen as the disruption. If it gets taken out with the body of the candle, like the body, it has to be the body of the candle, and then we can sell. But if price takes it out with the wick, it's just a wick out, which means that the buyers can still continue buying with their preferred entry model. I don't know if you guys can still hear me. If you can hear me, just indicate in either of the groups so that I would know. And if you can see my screen as well, so that okay. Yes, okay, can you hear me fine? So as simple as that, that is market structure. But most people still find it confusing because of the qualities of marking a valid break or structure. That is where the problem comes in. Anyone can call this the first most recent, but does it fit the criteria of the first most recent? That is the question. You could have other break or structures. Okay, now let's look at this. Some people will see this kind of movement as a break or structure, but it is not. As a matter of fact, there is nothing here, and most people might want to as well buy from here. That's not good. Okay, so as simple as that. But I will just list out the qualities of a valid break or structure. It must have a minimum, compulsorily, one or more structural liquidity, could be seen as SLQ. Okay, structural liquidity, in other words, could be called SLQ. Sorry. They are called SLQ. So that's the most important quality of a valid break or structure. With that being said, I think we have done justice to market structure. Though I've not explained the SLQ, if I explain it, it might be confusing, coupled with the fact that we just learned this other one. So just take this one home for today. Why we also check, I said we'll be doing 3 things here. Then for those that already know these things and they have little issue marking out entry models, now this one is for you. Now they say take a man to his comfort zone, alright, and he will succeed. I don't know whether that's how they say it, but I think it's something like that. Just like a fish, if you put a fish in the land, it's not going to survive. If you put a fish in a dry land, it's not going to survive. But if you put a fish in the water, it's going to do very well. No human being can go to the water to dominate the water, no matter what you think you are. The comfort zone of the fish is the water. The comfort zone of man is land. No matter how best you can swim, if you go into the water, a fish should outwork you in long term. So for those having issues with entry model, take these entry models to their comfort zone. How do I mean? Most entry model works perfectly for ranging market, while most of them works perfectly for trending market. They have entry models for continuation, they have entry models for reversals. But then they say don't be a jack of all trade and master of none. It is quite important that you choose at least one and focus on it. If you say you want to, of course I was taught all of them, that is why I teach all of them, but that doesn't mean that I trade all of them. I have tested all of them and I have seen their win rate, and I have also seen the market condition they work with. Alright, so you cannot use an entry model that doesn't work in a ranging market for a ranging market. For example, now let's say the key level, right? Let's say the key level now. The key level doesn't work very well on a ranging market, and some pairs are naturally used to ranging. For example, JPY pairs, this CADJPY that we are on right now, this pair loves to range a lot. It loves to range a lot. I backtested this pair, the 2 years price action. I have seen that the pair doesn't have a very good market structure condition in trending terms. That is, you hardly see this pair say he wants to buy and he buy. You can see it. You hardly see it. Sometimes when he wants to buy, it will just do like he's buying, and another time you can see he's not maintaining a particular trend. And anytime price is behaving like that, it could be seen as a rangy market. Okay, you can see it's not giving us a direct movement. So you don't approach a trading market entry model for a rangy market. It's going to make it seem as though the entry model doesn't work, but in this sense it works. Now, one example of a trending market entry model is the mitigation block or the key levels. For those that do not understand, I will draw a diagram now and I'll explain it briefly. So the key levels do not work perfectly well, and you can see most of the key levels here, price don't even come back to them. It leaves them and it goes. Most of them, price leaves them, and the next time it's coming back there, like how many my eyes have seen now, the next time it's coming back there, it's coming to take them out. So in this kind of price action, what works is the reversal model, which is the QML. Like I said, I'm not the founder of either of these. Okay, they have been existing. This is an example of a QML. I will explain it now. Now, I will start by explaining the key levels before I go to the QML, because if you don't understand, this one is not the normal QML people trade, the one of head and shoulder, though it's still under. Alright, but then it's not the same explanation all through. Okay, this one has to do with our key levels, unlike the other one. I think the other one has to, I don't really know that one that much. I think that one has to do with SBI, something like that, where they have something like this and then something like this. I don't really trade it, so I've not really taken my time to, but it still looks the same. But this particular one is the one that has to do with key levels itself. So I'm still going to say it again. Take the man to his comfort zone. Use the entry models in the market conditions that they work perfectly. Now, how do you know the market condition that they work? By checking it out. Past data, doing research. Okay, but I listed some of them. The ones I said we'll be using to explain whenever I want to explain. I said SAU, CADJPY, GPJPY, and ERJPY. I think the four of them. Among the four of them, the only one that is just like it used to trend sometimes, like has a trending market condition, is gold. But for some time, gold has been ranging, and if you observe, whenever gold is ranging, the QML works for it. Now, what are key levels? Before we talk about this QML, let us first of all identify what key levels are. Okay, I think I should hold because we just finished that market structure, so that it doesn't be so overwhelming. But for those that already understand, right, this one is for you. For those that already understand. So the QML does not work in a ranging, in a trending market. It works perfectly in a ranging market. If you even see a QML, and they have two ways a QML can appear. A QML is a reversal model. It is what initiates a new trend, but a QML can still be used as continuation, but there must be an initial entry. How do I mean? For example, I don't know if this one figured. Okay, I think it did. Let's say we took this QML entry here. Let's say we took this cell and then you are still on this cell. A QML can be seen as a continuation when you already have an initial entry. There's difference between somebody that entered here and somebody that wants to enter here. And this place is now, this is a QML again. This one is more like a continuation. You can see he sniped it and it started moving. So this can work as continuation only if you already have your initial reversal, because the extreme point of interest for QML is, would I say, the strongest point of interest? Yes. So this one is just like if you want to scale in, you don't use the name, like you don't say okay, yes, if you want to scale in, yes, like scaling in, you won't necessarily say stacking. If you want to scale in, you scale in positions using continuation models. All right, at that point too, you can also decide to start using your key levels inside. Like this one now is a key level. You can just decide, this one is when you already have an initial position, using the profit gotten from this to open this, maintaining the SL, not using this SL, though you have to like use the invalidation of that key level. For those that don't understand the key level, we will get to you. Alright, I just had to explain the market structure because this is like a combined class for everyone, both beginners and everyone. Yeah, so it works perfectly well in a ranging market. If it's for trending markets, like when gold wants to buy, you'd see that it just taps on the key level and it goes, taps on the key level and it goes, just like that. There are so many examples I could give you right now for QML. On CADJPY, QML works 60% of time. You can go and research it and get back to me. Tell me what you see. 60% of time, the QML works perfectly well. Why? Because that pair likes to range a lot. So a pair that is indecisive, you could see that, you can see we have more, like a lot of it. And like I said, it is a reversal. A reversal is not like, okay, that trend is what is ongoing. It's just like that example I was giving when I was drawing that market structure. I said we could have a reversal and a continuation. Let me draw it again. I said we were having an uptrend. Okay, let me use downtrend because this one is a downtrend. A reversal could be seen like when price wants to like change direction, but then it comes back to the continuation, like that reversal, a continuation. Like this one now, you can see that, okay, let's assume that we are on an uptrend here. For those that already know, what validates your QML is the failure of your key level, whether fresh or unfresh key level. Like this one here is unfresh. The failure was this. Some pairs, that's why knowing a pair behavior is really important. In class, when I explain, I use human being as example. I said if you are a friend with somebody, let's say, okay, even your siblings as well, you know that you study that person to know their likes and dislikes. For some, they don't like to eat rice, and for some, they don't like to drink tea. So for the people that don't like to eat rice, don't give them rice. Otherwise, it seems as though you do not like them. So that's how it is here. For some of these pairs, if you study them, the key levels has to get invalidated with the body. Why on some even the week can validate it. The some I mean is like gold and this pair as well, whether the week or body, the moment it just goes below the normal key level invalidation. But you have to be honest with yourself. Let's take for example that you actually wanted to take a buy here. The question is, if you are taking a buy at this, though we don't trade on fresh key levels, but let's assume it was fresh. If you're taking a buy here, will this be your SL at this point? If price comes to this level, as price taking you out? If yes, then you have your answers, your QML is there. But if in situations where you see a very tiny push downwards like this, and you know that in reality somebody taking this buy has not been taken out, then you don't need to crown this guy a QML yet, because what validates this QML is when price breaks and invalidates the most recent key level. So like I said, the continuation model is for trending markets, all right, while the reversals is for ranging market. Please kindly pay attention. Yeah, the QML is the same as the inverse. The QML is actually the same as the inverse, yeah. So we're just going to do this for today while we check the market structure from the, what's today's day? This 22nd. We're going to go to the most recent price action. We'll check on gold, what happened last week, and what do we expect to happen the coming week based on market structure. So just like a market review, then we take some few live questions. I think I already highlighted some questions that I said I should be reminded. I highlighted. Okay, so let me clear all of this so that let's start with this guy over here. We'll have to go to the 4 hours time frame first. Let's see overall what do we have there. You can see that even in the 4 hours time frame, it still indicates that this guy likes to range. You can see no direct movement, unlike other pairs that may likely just be moving like this, like this, like this. So even in the higher time frame, there's no clear direction. But what do we need? We just need their most recent external. What is an external? An external is, we'll start from the 4 hours time frame. It has the qualities. It has to have a 3 valid internal. Right, it has to have a 3 valid internal. So let me draw this first. This is like price level outside the internal structure. No, the market doesn't just move randomly. It's actually coming from somewhere, and it is I don't know. Hold up. Can you guys still see my screen? Please, if you can see my screen, please just indicate in the Telegram group. Please, if you can see my screen, let me share it again. I don't know. Can you see my screen? Please, can you see my screen? Let me hear you on Telegram. Okay. So we're going to the 1 hour time frame to check out our internals. And the reason why I'm not including this, I know this is a valid internal. The reason why I'm not including it is because price later came back to take it out. So instead of just adding it, we'll move it because it got swept. I'm talking about this here. Instead of adding it like this, so it's just going to be like this because it later got taken out. I explained it. This low was taken out, so I want to know the market condition. So this thing I'm marking is just the market structure. That thing I explained. The same thing here. Now, this is not a valid structure because this came here, went up to this point, and then broke below. So it's just like this. So let me remove that one. So I'm going to see if price has created any substantial entry. Okay, the last we have is this. I think the last we had is this. This is the same thing I explained when we began. Okay, so we have this guy here as our inducement. Another thing that I want to say is this. Now, you remember when we talked about that QML? Another important thing you need to know, the distance between the invalidation of a QML, right? The distance between that invalidation, which is the protected high or low, is really, really important. For example, if it's really far, okay, if it's far, there is no need taking a trade, or you can just take 50% of it. Let me use for example, like the most recent key level that was here is this one, this right here, that later failed. Now if you look at this closely, you'd see that this is a QML entry, but the issue here is that who would take a sell setup from here with the SL here? That's the issue. But this is actually like a QML, and it's correct, because if you do this, then how many weeks to reward are you targeting before price eventually gets to the second valid low which it bounced from? Because this is not what it's. So in this kind of situation, you could miss your entry, but the best that could happen is being safe than sorry. So whenever your QML, the entry, I think I said it in evolution, whenever your entry is, the invalidation is far away, now just put your gang boss or Fibonacci tools to 50% or 75%. 75% to be around here. Now you could see that from this point down to this point, 100, 75 to 100. So if you enter here, where is that still? It's better. So at this point now, you can comfortably like put your SL at even your TP at 1 to 3. At least you are safe than entering from here, because this invalidation is really outrageous. Most of these things, when you trade, you just observe it by yourself as well, and you see that over time it actually works that way. So now in CADJPY, what do we have here? We have price bouncing back from the second valid structure, but this trend is still bullish. This trend is still bullish, but what we should look out for is this: there is no QML here to buy. There is no QML. The last QML that was created for sale, I think price worked on some and others, some was invalidated. I think we had one here. I think some people took it. I did not take it. I did not trade. 18th March. What's today's day? This 22nd. So last week. Okay, I did not trade. So we had this one that played out here. So if this was like in our market review now, would have been looking out for this trade, like everybody monitoring it and all of that. So presently, what we expect from this guy is to create a continuation model with the QML, because it has already started from here. So what you can do is right now look out for QML that price may create. Now he created one again, but that one got missed out. I think here price did not trigger it. Yes, this was the last one price created and it did not trigger. It snubbed it. So using the continuation model, not like you are not doing your top down analysis, but then you don't have to like go to like the weekly time frame and all of that. Once the method is this: once you get your range from the 4 hours, from the 4 hours or the daily, you get your external from that same 4 hours. Why you get your range from 4 hours? Because most likely you just need to know the direction externally. What is the direction of the market? Okay, and then when you get your external, let me check. Okay, so yeah, we had this misentry. Now I won't advise anybody to wait for this entry again, because in my own study I've realized that if I'm targeting 1 to 3, the few times I dropped set up on that Telegram channel, I just set up for about 2 months thereabout. We had numerous trades and less than 4 losses, if I can remember. If it was even up to loss like 4, maybe like 2 or 3 out of like, it's more than 15 or 20 for that particular time. So one particular thing that saved me most of the time, that made it that we did not have too many losses, was this my rule. Now my rule is this: I target 1 to 3 every time when I'm trading. And if I'm trading 1 to 3, as soon as, if price doesn't trigger this entry and it gets to my take profit at 1 to 3, I may likely forget about that trade. In some cases, price may come back to tap on it and play out, but I won't be interested anymore. Because why? Price is currently not at that region anymore. I see it like you can't miss what you never had. So like in this case now, this would have been a good entry if price have not, you can see how far it went. So this entry, and now price has not created any other entry pattern here. And like I said, price may likely want to create normal key levels, but they don't work on ranging pairs. They don't work. That normal support become resistance, resistance become support. They don't work on ranging pairs. That's why most people might complain that they are having too many losses. It's because you are trying to use it here. It won't work. It will not work. Okay, it's not going to work. Because if we are even counting all of that, then we can even say that, okay, fine, that we had this sell here. Why did you not hold? They won't work. What works is QML in ranging market. So we don't have any substantial setup on this pair right now, aside this missed entry that was here. And most likely, if price takes out this guy, this is going to be our inducement, this guy. So the breakdown is this: your inducement, look out for it. The reaction of price at this inducement, this same place. Now let me give you a very quick scope to use for the week. If price comes into this place that it is right now, and it takes out this high, if it takes out this high, and no, this will become our resistance, that will become support here. And if it takes it out like this and it comes back to it, you can take a sell. We will now call that a reclamation of an inducement. That's what it will become, reclaiming this inducement for the sell. Okay, that's going to be our little review on this one. Why, if price takes out this one, be rest assured that this high will go out and the buy will continue on full time. Full time, I mean, it's not like it's going to keep buying and buying, but then if we see a reversal model, for now there's no even reversal model for buy here. There's no buy reversal here. Price did not create any before a reverse. That's why I'm convinced that we most likely should be reclaiming this inducement, but the condition is this: it might take out this one. That's why I say don't take this sell. Okay, don't take this sell. Allow price to create a story. This could be seen as our normal resistance that become support. And those that do not listen, maybe like I said, those that do not understand also, I've already said it before, don't trade key levels inside the ranging market. Like this one now, if you don't listen to me and you try to take a buy from here, because price will break with the body here and then give us resistance that turn support, it's not going to hold. Check orders, you can see they did not hold. Now another thing I observed in the market is this: when price has a reaction from a particular reclamation, a particular QML before it failed, how am I going to put it? Let me draw something. Let's say we have something like this now, this QML, this resistance that become a support because price broke through it. If we have this now, and this can be a very good QML, if like higher probability QML, if when price came into this, it gave us a little reaction like he wanted to buy. Now that reaction is like a confirmation telling us that there is, would I say, power, or there is a reaction from this, like there is liquidity sitting here. That is that reaction. And then if price later breaks through it, you can take your QML. It could be seen as a high probability QML because before that particular resistance that turned into a support failed, price created a little reaction. Check the ones that have been holding. Even this one here, you could see that there was a reaction to the upside first before it failed. So you can also watch out for that, for the reaction from this particular key level before price may likely fail it. Otherwise, if price still comes back to break this guy, remember, if your trade doesn't trigger and it gets to your target, holding it becomes more risky. Okay, our time is really fast spent, but okay, somebody asked a question, said, how do we know a ranging pair? How do we know a ranging pair? Okay, fine. I explained before, and I said a ranging market is simple. It is neither going up or down. It is not breaking above and it is not breaking below. The same thing, I used the example, I said ball and all of that. Yeah. So when you see a pair that small time is going like this, another time is here, sometimes is here like this, another time is here, like this particular pair now is an example of that. Sometimes even when it decides to, okay, let's say we want to start buying here, it later comes back inside this again. Like it's not breaking, giving us our normal. You know, when you have a clean price action, you need to see price like this. Why is this QML working inside of this ranging market? Is because that's the kind of entry model that works here, because it's just like an indication of something like that. That's why it's working. That time where it will come back to reverse, you can see that time it will come back to reverse is it going back into the range. You understand me? Yeah. So, or otherwise, if price gives all this price action, fine. But if it doesn't, assuming that it was already here as of today's breakdown, then we'll just watch out for it. But we can only react to what price has given. We can't predict it in our own book, except price gives us a storyline, because this thing we drew here is just a normal drawing. We're not the ones to like push price to do this, but we can react to what it does. Or if price comes down to take out this, but before it does, it gives us a new QML somewhere around here, then this one becomes invalid and this becomes valid. Remember, each model, whether it is the continuation or it is the reversal, each model, it's always the most recent that price will obey. If the most recent does not hold, then others have high chances of failing. So this is going to be the market breakdown for this particular pair. So let's check gold before we go into live questions and an answer. We have spent over like I think almost 1 hour 30 minutes. So let's check SAU. I drew something here. Let me take it out. 68 joints. Because gold is like everyone's like majority people's pair. So you can see that in between this thing here, gold was still ranging after. And yesterday I took my time and I went back 3 years ago to check the price action of gold. I discovered that 3 years ago, I think that was by this time, not 3 years ago, I think 2024. By this time, 2024, this same thing that's happening here happened. If you can go and check tonight before you go to bed, you would see this same thing happened. Price left a high and was roaming inside the 2 swing points that it kept. 2024, check February and March price action. Start from January, February and March. You can see that from this February down to this point that is March, is more than a month. Gold has not broken out from either this or this. So we could say that it has been ranging internally here. Alright, but it is still tradable. People are still taking trades. QML can still work. As a matter of fact, I think it worked on some other, just that it may likely not come back to it, but some few other entries I can see here. Even look at this QML as well. Some few other entries I can see. 1 to 3 will work out here. This one, the distance is far. If you use the 50% stuff I explained from here to here, 50 or 75%, then you should be in this long run. This as well. Price did not come back to that one. I think the last one price created here was, I think it did not come back to trigger it as well, because the invalidation was this was the entry. It did not. Let me see if we have any entry. The same thing. So we don't have any specific entry, but let's just check the market review of it. We'll start from this point to draw out our internals, and then we'll go to the most recent price action to know the direction of gold based on structure, not entry based on structure. We have direction based on structure and direction based on entry. Somebody asked, you said we should look out for price reaction around that inducement so we know if we can enter with a reclamation. So does the breaker has to be with the body of the candle or just weak? We should look out for price reaction around that inducement so we know if we can enter reclamation. Okay, if it's that CADJPY, if it's the cell, if it's that particular cell, that one I outlined there, price has to take it out with the body of the candle for it to be a valid QML. Because what is this QML? It's simply the failure of a key level. It's the failure of a key level. So price has to take out that particular point of interest with the body of the candle. Yes, it has to take it out with the body of the candle. So let's proceed. Is the recent QML on CADJPY valid? Because it seems like it's retracing. Like I said, price has missed that one. So for price to come back there, I doubt if price will respect it. So it's just better that it's just better that we just wait for price to take it out and then we just enter with the new one it will form. Because if price takes long like that, then the chances of it playing out is even very low. So let's check the inducement. We have this as the most recent. I'm starting from here so we can go to the most recent price action, and then we have this as the disruption. So following the continuation model, I told the goal is to obey normal key levels. So if we have here, you can see that we had a resistance that turned into a support here. So let's assume people were taking a buy here. They are supposed to be taken out when price crossed this leg here, because this is the one that made it valid. So in that case, we have our QML at this failure of this guy, and then we have our SL just here. So you can see you can still follow up when you have your normal QML. You can still follow up with your normal key levels, because in gold it's quite different. The key levels will hold. The reason is because gold is to trend, so the normal key levels like this one, you can see them, they will hold on their own. Even mitigation block works perfectly up till now. So price has taken out two disruption here, and it was selling until, remember our QML, for us to have a buy QML, then a sell POI has to fail. So we have this sell POI that failed here at this level. We had that sell POI that failed at that level. You can see here, failed here. So the entry is here. We could also use this thing I explained. If you use 50% or 75%, you miss entry. If you enter directly, it will trigger you. But the SL is outrageous. I don't think anybody will be risking this to this, except if you'll be going in really small, like you'll be dividing your risk, like very tiny risk. That's what will make you enter here and still maintain the same stop loss. Or maybe then you just set ×2 lot size at the middle and ×2 at 75. Then we had price create. Okay, let me not just follow it up with key levels because our time is already fast spent. Let's just get the structure. So price book structure here. Then we had another one. Remember, for us to have a new inducement and disruption in the opposite direction, price has to take out the previous one it created. So firstly, the previous, we have this guy here as our inducement. Let's start with this guy. This is our inducement. Let me remove this. This is our inducement. Why? It broke structure here and it created a structural liquidity. How many people are in this class? Okay, 434. Alright. Then these are disruption. It gave us structural liquidity here, it broke structure here. The same thing. So for us to say we are now bullish internally again, despite this bearish move here, remember that before we become bullish internally, price must, emphasis on must, even if it doesn't come back to it, price will create a reversal sign that you have to take note of it, even if you don't trade it. That's why I said that CADJPY, I doubt if that pair should buy really well, like on the context of it buying, it should create except if it creates like tomorrow is Monday, yeah, except if it creates like a reversal tomorrow or within the week. And we're still going to talk about it in the next section. Whatever happens within the week, we're still going to talk about it in the next section. So regardless of that, and we're going to see if we'll still get any entry while we still explain. So yeah, we had this as in our inducement and our disruption, and let's see where our inducement got taken out from. You can see where I talked about that range stuff, but QML was still working inside here regardless. That's why I told you that QML works perfectly. Despite the price, you can see from what's this date? This was February 3rd. From here down. Wait, let me see where this is. Wait, I think we have something here. Hold up. I'm seeing something like a structural liquidity here. I think this is our structural liquidity. Yes. This is the inducement, not this. The inducement and the disruption. Yeah, I just saw this tiny sweep. It was just 1 week. Look at it here, and it's still valid as long as it is structural liquidity. No matter how it is, it's still valid. We're going to do this till we get to like the recent price action to know what we're doing. So yeah, we had this, and then price took it out. In that being said, price also came back to create a QML around here, which he never came back to. I told you guys, once the entry price are just hit your TP, just cancel it. It's better safe than sorry. So if you're targeting 1 to 3 here, at this point you should know that okay, you don't have anything here, just forget about it and allow price to create something else. He also created another one here that triggered, but the issue is this: except if you are targeting 1 to 2, otherwise this SL, they are too big for my liking, because this is good. Except if you are targeting 1 to 2, then we can say okay, fine, take it. But if you are having a substantial risk to reward, a trade like this, you should know that you are really going all in for it. It can go 1 to 2, but it can't go 1 to 3. So I doubt it gets to 1 to 3. So just later thing. So it's 1 to 2, it will go 2.5. It will go. Some people trade 1 to 2, 1 to 2.5, and they are very much profitable. So you just choose what works best along the line. Alright. Now you can see that this came back to reclaim this, but still it wasn't taken out. Now people that are still holding this buy are still holding it, despite price came back here, because this is just a reversal. Like I said, a continuation will still happen. And then this was ongoing, and then price came back to take out the QML, creating this here. You know, this is really ranging, like it's ranging for you. We had this one here again. So remember that I said we need to see like a reaction. You can see this one had a reaction. It wicked out, and yeah. If the SL is too much and you take 50%, you are still on the safer side. It all depends on how much you have and what you have to risk. So you can see either entering here, wherever, you are still good to go. They are all reversals, and why are they playing out is because it is inside the ranging market condition. So that kept going. We even had another one. You'd see a lot when price is ranging, like a real lot. That one, it doesn't have to do with market structure like that safe. Now the reason is because it's ranging. When they're talking about like ranging, it doesn't have like the trend, uptrend, downtrend. You don't have to look for all of that. Just know your external, and then go on to check in for the last most recent valid internals you can see. Then follow up from there. Even if within ranging markets, just follow up from there. You can see this one, the same thing. stay at their QML, and they play out really fast. That's the thing. It's very rare to see QML that will stay for 24 hours and you have not hit TP or something. It's really rare. They move really fast. You can see all their candles really long and big. You can see they are really long and they are big. You can see once price tap on it, you always see all these candles like that. You can see even the buy too. You can see, you always see those momentum candles. You can see this one. So, and then later price took this out, making it clear that okay, we're looking out for buys for a while. And then we had this guy here, which is what our QML for buy, which also held. I'm really conversant with sells than buys, and I really focus on sells very well than buys, because I feel like along the line and most time I don't even meet buy point of interest that much. And whenever I want to like trade, I mostly see the sell reversal than buys. So yeah, we had this guy here. Now, if you look at this now, something confusing happened. After price took out this disruption, it is very obvious that we need to start buying if you are following market structure, because at that point, now the trend has come into play. The moment it took out this disruption, you should know that you can look for buy. And this one here is a QML reversal for buy. Fair enough. We had this, and then along the line we also got a reversal again for sell. You know, one thing about this thing is that this QML is like one of the most profitable entry model one can trade. The reason is because it doesn't lie. It is the originator of the trend. Alright, it's the originator of the trend, and if you don't really understand this, if you don't really understand the QML, you may likely just like trade anything and hit stops. Okay, so let's just do this real quick so we can take some questions. So we had this, but I think the entry got snubbed. This did not trigger it because this invalidation happened here, so there's no way we would say that we got an entry. Nope, it got like this is a miss entry, and I told you at 1 to 3 is gone, so we missed that one. So let's see what the price action. And yeah, most people once you miss a particular price action, like this diagram this person sent, there's a diagram somebody sent. It's talking about a QML on CADJPY if it's tradable. Now something is already playing out. Something has already played out before that one. It's always the most recent at the extreme. Now if there is a, okay, let me use this guy here for example. Like this thing here now is a QML. This thing here, in some people's book, this is a QML, but you can't say that you are leaving this one to come and trade this one. Okay, you cannot leave this one and say you want to come and trade this one. No, it's always the ones at the extreme, because the question is, where will your invalidation be? If you want to take this one now, are you going to do this? Nobody is going to do this. Now sorry that the class is really long. It's because we are doing 3 things at the same time. Yeah, so we missed this one again. 1 to 3, that one is gone, but we also got an entry regardless, I think, which was this. I don't know if this got to 1 to 3, but yeah. Let me put this. I'm just following it so that I would, okay, it was up to 1 to 3. I'm following it up so that I would know where we are in the current market, just in case we want to like take any trade from this. We should know what we are doing. We're almost there. So the later price came back to take it out. Now it is really important that price invalidates this QML. It is really important that price invalidates the key level. It's really important, because if it doesn't, then the QML is not valid. So we didn't get anyone here. No, we did not get anyone there. And then up to the current price action, there is none. But we have, I think we have a breakout. Not yet though, okay, not yet, because this low is still here. So now what we have to look out for is, will price take out this low? That's our take home on gold. Will price take out this low? And if price takes out this low, what sign would it give us before taking out the low? Is it going to give us a reversal or a continuation? That depends on what happens. And if there was like a QML here, we could take it, but with low risk, because we are approaching this low. But regardless, we're still going to look out for this. If price comes to this point and it creates something like this, like takes this out, but before taking it out creates like a key level, and then goes like this, let's say like this. Now okay, fine, now we are going to enter from this to buy. But otherwise, if it takes it out normally and then still comes down to give us our QML, then we sell. So regardless, it just revolves around what it does within the week. But for now, there is no entry here, and we actually really do need a breakout to have a solid bias right now. But what I explained here is what is most likely going to happen, and that's like our market review and our breakdown, what we expect. If it, we can only react to what it does, we cannot control the market. So we'll be taking just 5 questions because time has really gone. It's almost getting to 2 hours, so that people that might watch the video, it won't get really stressing for them. So let's just take 5 questions. So please, in your various groups, you could ask a question, and okay, one question I see here, the person said, I noticed that not all failed key levels respect QML. So at what point do we consider QML to have strong probability of holding, because some swing points still fail for QML? I noticed that not all failed key level respect QML. Not all failed key level respect QML. I don't understand that question. Not all QML that price respects, or not all failed key level respect QML. That question is confusing. Can you read it again and write it better? Let me check from here. So this one says, okay, why the other person is writing his question anyway? Let's just take this one. Okay, so I have a question concerning this key level. I'm still not getting it. The best key level to trade are the ones found at weak points and extreme points. Now, the best key level to trade is not at weak point per se. When you are saying weak point, what do you mean? Because the best key levels are the ones at the extreme POI. I already explained them. You can't see a key level here and you're trading it. Meanwhile, we have one here. It's easier for invalidation as well. Okay, it's easier for invalidation. That's why it has to be at the extreme. Also, yeah, another question, the person says, when I'm looking for key levels to trade, must it be in the swing or substructure? That question is really important as well. Now, we could have in both the swing and substructure. We could have the and it's not important that you have like a structural liquidity in QML. Before the DUI, like the BOS must have a structural liquidity. It's mandatory that the swing or substructure that I find my key level, like the BOS must have it. No, it's not important. Like this thing here now that we took this sell here, there's no structural liquidity here. This is an entry model. Talking about structural liquidity, it means that you are talking about a break of structure. When marking out disruption and inducement, if one of the disruption or inducement doesn't have SLQ in it, should we still mark it, or we are only marking the valid ones? Yes, you are only marking the valid ones. You don't mark the ones without structural liquidity, because any break of structure that doesn't have a structural liquidity is a structural liquidity on its own. Okay, you said I should mark out the most recent disruption and inducement on gold. So after price took out the disruption here, price created the new one here. I think these are our inducements. Yes, the inducement has the structural liquidity, swept the previous candle, and then it's our disruption. Both of them are out, and that is why. Okay, that brings us to why this sale held. Now I understand better. So yeah, that person that asked that question, yes, this is our inducement over here, and this is our disruption. With that being said, that is why this QML safe. Okay, you can see that we had this here because we are bearish. So that's why the sell is also ongoing. So price has created, let me mark 1, 2, I think up till this level, and then where it currently is now is here. So we have this here and this here. So this is our most recent inducement. It could either be reclaimed or taken out, depends on what price does. And also it could also give us like a reversal for buy as well. And then we have this one here, a disruption, the same thing applicable. So this is it. So we just have to monitor it together. Let's say we are bearish on a pair, looking for continuation entry, and we have two different dual key levels. The first recent key level is on fresh, while the second is fresh. Which one are we going to take? Note, for the second key level to activate, the first on fresh have to invalidate, making that place a possible KML. Now that's a good question. The ones that on fresh fails, right, that fresh key level, if price mitigates that QML, that fresh key level might not hold. That's the truth. The buyer might not hold. So you don't take the on fresh, you just take the QML while you look at the fresh. Watch and observe it. So let's check. Say, does QML has a high win rate than key level? QML is still key level. QML is still key level, alright? QML is still key level. One thing that you should notice that it is just an inverse of key level. Let's just put like it's just a reclamation, like a zone that was lost. Now we are reclaiming it. That's one. one of it. Yeah, so it's still key level. So saying that QML doesn't have higher win rate than key level is like saying that does key level has higher win rate than key level. What you would ask is QML inverse and SBR and RBS, which one has higher win rate? Now the both of them works the same. It all depends on the pair and the structure of that pair. That brings us back to take it to its comfort zone and it will do well. Seeing a key level or QML on the 4 hours and the 1 hour time frame guarantee a high probability trade. Seeing a key level or QML on the 4 hours and the 1 hour time frame guarantee a high probability trade is, I don't understand, but I think if I should understand you very well, are you asking that a QML on 1 hour, 4 hours, which one is high probability? Now you take your entries from lower time frame, and the lower time frame is 1 hour, not 4 hours. You draw your major externals on 4 hours. But the truth is that to have high probability trade, you have to have fewer trades. Remember when I was dropping setups on that Telegram group, it was fewer trades of high probability. So, and I made sure that most of the trade, majority of them were in line with the trend. So if you are trading against the trend, one thing you should notice that just be ready for the outcome. Right, you can take an SL. So let's check another question from these people here. Does QML work without confirmation? I've tried trading QML and most times I don't see confirmation. Yes, you can trade it without confirmation. Most of these entries I outlined, I took it directly from the entry. So yes. Should the key level be taken out with the body of the candle, or can it be weak before we consider taking the QML? If the key level, it can be taken with the body and the wick. It depends on the pair, like I said. Because some pairs, like gold, you can take out with the body, you can take out with the wick, and it's still valid. Alright, I've done the current inducement and disruption on gold. I've done it. This broker I'm using is FXCM, so just in case it doesn't align with your broker, you could check it on this. I noticed that, okay, I think I've answered that one. Let me check another one. That question is not clear. The last person that asked the question, one of the question is not clear. Okay, said the other day I think I heard you talked about QML best at weak point. Like weak point. What weak point do you mean? Because we have that we are trading from left to right. Like if price like this, we are trading from left to right. Your entries are always at the left like this, left to right. So actually this is weak. This is a weak high, a strong low. So weak, but it's still at the extreme now. I think maybe this is the week you are talking about. I don't really understand, but I think this is week you are talking about. This is week, a weak high now, because it got taken out. So weak high, right? And strong low. So is that the week you are talking about? I think there is a disruption of order flow before the disruption you marked out on SLU. There's an SLQ at the BOS above the inducement. Let me check. Let's see. This is the inducement. There's no structural liquidity here, none here. There is none here. There is none here. No, there is none. This is the right inducement and disruption. Except if you are using another broker that has it, you could just tell me. Because these things here, they are all structural liquidity that made up this break of structure to be disruption. This is structural liquidity, structural liquidity. This is an inducement, a valid break of structure. Okay. seeing a key level or QML in the 4 hours and the 1 hour time frame, does it guarantee? I don't understand that particular question. That one, I don't understand the write-up. Okay, somebody say, but there was a fresh inverse key level here. Why did it fail? Where? There was no inverse key level. No. That thing you marked is wrong. This is what you are marking. Where is that? I'm not even seeing what you marked, but looking at that diagram, that thing you mark is not correct. I'm not seeing anything. It's not correct. Price has not created anything. If you say that this is the last, okay, let's put this as the last unfresh key level here, fine. The invalidation of this is actually this. So even if somebody was taking a sell, they are still in the market here. They are still in the market from here to here. So until this is taken out, before this can be like a QML. So I think we're going to stop here for today, and the next section will be next week Sunday. In course of the next section, if we see a trade that price has already created the price action, because we can't force price to create what it hasn't, but sometimes by weekend we would see price already create a setup for us. We could still execute it together and trade, but if we do not see, we can't force it. All right, so thank you so much for attending to this section, and see you in the next section. This video will be posted by tomorrow morning. Yeah, because I have to compress it to be a bit of a moderate megabyte, so that everybody can download it. So see you guys in the next class next week. So everybody is still attending numbers, beginners, everyone. We're still going to do our market review like we did today, identifying the recent price actions, still checking other pairs as well. See you in the next class, and have a lovely week ahead.